is this just a classic wall of worry in the stock markets right now? The stock markets have been, I say, grinding higher, pushing higher over recent months, but there are certain areas of the investment community who are actually quite bearish. If we look at this is from the S&P Global Fund Manager survey, literally just taken just in the last week or so, and you can see that fund managers are still pretty bearish towards stocks. Risk appetite for the next 30 days down, and expected equity market performance in the next 30 days is down. So now, is there any justification for that bearishness? Well, certainly from a technical perspective or sentiment perspective, we are at a historical time of the year whereby average returns for the S&P are negative. So as we go into September, the net return going back to 1928 is on average down for the month of September. So the potential seasonal pattern is there, but then everyone knows that seasonal pattern as well. But nevertheless, we've got a backdrop of certainly some areas of the community, maybe less so in retail, that is quite bearish. And then we go and get what we had yesterday. I'm recording this Saturday morning, whereby Powell's tone was that little bit more dovish, and that really helped the stock markets going higher. And I'm not going to spend too much time on the S&P just here. I'm actually going to go to the smaller cap Russell 2000 index, which benefited much greater purely because its smaller companies are more sensitive towards rate hikes and rate cuts because they borrow more. Microsoft doesn't need to borrow, and so if we look at the Russell here, that was a fantastic classic breakup bar here, and if we come out to the weekly time frame, it's still got work to do to get back to its earlier highs from the back end of last year. So could it be that we're going to see the smaller caps outperforming than some of the mega caps? So I think that could well be the case, certainly in the near term, and we'll see if the Russell can get up there. So coming back to the likes of the S&P, it's a really quite an interesting one at the moment because, okay, like I've just said, we've got a backdrop of a bit of a wall of worry. If you've got investors on the sidelines, then there's always going to be a point where they might throw in the towel and then have to start getting long. The flip side is we're going into September, whereby, like I've just shown, history suggests that September is an underperforming month. Now, if we come out to, if I zoom out a little bit here for the S&P, it's right into this long-term upper trend channel line here. If I zoom out, you can see this trend channel, which it's flipped over. As you can see, it's overshot before in the past, only to then come all the way back. And I suspect even if we do go higher, then I think this is going to be a trend line that should be on your charts for a long time to come. Because if I zoom out, I've got it going way back to all these lows from 2018 through here. And then obviously for all of this here, even up to that little retest of it back in 2022. So it's a fascinating backdrop. We've just had a big jump. We've got the likes of the smaller caps outperforming here certainly on Friday, and a lot of obviously pent up buying that's come through there on Friday. So having said that, we've got the backdrop and all of that. Plus, if I bring up an MACD here, we've got a divergence in play on the daily chart. Now, it's like a double divergence type affair at the moment, where it's making a series of lower peaks, the blue MACD line, even as price is going higher. So that's going on in the background. Now, if the S&P accelerates higher, that divergence will just disappear. But it's there at the moment. So, yeah, it's one to watch out for as we're getting closer to September. Do we still see some of these divergences that are in play start to come off as we get into September, and we start to see stocks taking a breather into September? But right now, given the price action that we saw there yesterday in the headline stock markets, the S&P and the Dow and the Nasdaq. And in fact, you can see with the Nasdaq, it's underperforming at the moment because those mega cap stocks are underperforming. I think it's just been a period of rotation, generally speaking. So watch out for the Russell. Technically, the Russell looks really interesting here for more upside follow through. Maybe once the Russell gets up to these highs from November of last year, it takes a breather up there somewhere, and that's when we see a breather overall. But right now, this is a roaring bull market, and with a backdrop of sentiment which is a bit negative from the investment manager community. Now, at some point, there'll always be a pullback, but right now, not. And so if I had to pay a wager on it, then I'd be looking for follow through here on the Russell, which was likely therefore to see some form of Russell follow through on the likes of the Nasdaq and the S&P. They are slightly different, and so watch out there, and definitely watch out for these divergences as we get into September. But in the very near term, everything looks up.